Now, the Reserve Bank has kept the interest rates on hold at 3.5%. The repo rate is almost at a 50-year low. The bank slashed rates last year in a bid to support the economy in the face of lockdowns. Joining me now to discuss this is the head of financial education at Old Mutual, John Manyike. John, always a pleasure chatting to you. Thanks for making time. So the repo rate remaining unchanged at 3.5%, not a surprise, is it? It was expected.
No, absolutely no surprises there. In fact, there was no reason to think otherwise, and I think that's confirmed by the fact that the vote was quite unanimous, to keep the interest rate the same.
Yeah, there were some people a couple of days ago, thinking around the uptick in inflation, but as we see, that didn't ruffle the feathers of the Reserve Bank at all. No impact.
Not at all. I mean, if you look at it, it's still pretty much in the midpoint of the target range of the Reserve Bank. But of course, the Reserve Bank will also look at other factors, the underlying pressures in the economy and the risks involved. And they were quite conservative. So we've got reason to believe that they are unlikely to go up in the near future, perhaps maybe late next year. But again, you can see that the tone of MPC is that of, keeping it almost the same for the longest time possible. But of course, all of this is subject to a number of factors. So, all things being equal.
Yeah. Let's talk about the growth forecast. They have revised that from the 4.2%. Yes. They've now revised it to, 5.3%. Speak to us about that and what the impact of the recent unrest will be from their expectations on our economy.
I think that's already being factored in. They did make a point on that it did have a bit of a dent from a manufacturing point of view. But the MPC still remains optimistic that economic recovery is very much possible. You can see that the consumer confidence is positive. Consumers are on a rebound compared to the same period last year. There's generally a recovery, even when it comes to people's earnings. I think one can expect also employment to start improving, but that does not necessarily mean that the unemployment rate will start changing drastically. It takes a while, but it doesn't mean that you won't see more job creation in the short term.
Yeah. Was there any focus on the recently released GDP rebasing and historical revisions?
Well, I think, all those things, the MPC is quite clear that, there are guidelines that they look at from time to time, but they're not necessarily married to those guidelines. And I think they're quite thorough in how they're applying their mind on the best way to move forward. And I think they do recognize the need to support economic growth. And I think the Reserve Bank has done exceptionally well.
All right. Thanks for making time. The head of financial education at Old Mutual, John Manyike.